And welcome to another edition of the Nerdy Agent Podcast. I'm your host, Luke Pettersen, with my brothers and fellow nerds, Josh and AJ. Today, we are going to talk about the future of iBuying and why it matters for your real estate career.
Ooh.
But before we get into that, we are going to start with the Would You Rather of the week,
which
I feel like is a slam dunk, but apparently Josh thinks this is a little bit more difficult than
Should
I think it is.
we do we do the sound effect for the business tip? Should we do a Would You Rather sound effect every week? You have to say the words "Would you rather" in the sound effect. No, I don't know if that was Haley can work on that. We'll try about it next week.
The Would You Rather of the week is: would you rather have a big flat backyard, up to 1 acre, with whatever you wanted, a pool, a baseball field?
That was Luke, by the way. Everybody, just to be clear.
Start over then.
Why are you being so perfectionistic today? I think it's been good.
I got threw off.
You have to talk into your mic.
Luke's on tilt.
I do. Can we
Threw
speed
on.
this up then?
Is it
threw off or
They
something?
look weird
How tall
doing
do you think I am?
They look weird doing
Pull it
this.
this way. Yeah, now talk.
Threw off or thrown off?
Do you think I can do a fantasy baseball draft while we're doing the podcast?
Yes.
Okay.
And welcome to another edition of the Nerdy Agent Podcast. I'm your host, Luke Pettersen, with my brothers and fellow nerds, Josh and AJ. Today, we're going to talk about the future of iBuying and why it matters for your real estate career. But first, we're going to start with the Would You Rather of the week.
Would you rather?
That is our new attempt at having an intro to the Would You Rather of the week.
Give us
I
feedback.
think
Tell
this
us if you
week
loved it or
was
if you really loved it.
It was a huge fail this week. Would you rather have a big flat backyard, up to 1 acre, with whatever you wanted? A pool, a baseball field, a pole barn with a sport
really
court
small baseball
inside of
field.
it, or a backyard with a view? The lake or the city, apparently, are options with the view.
There's some people that live in Manhattan apartments and they look out over the skyline. They would much rather have that than
I'd way rather have 1 acre
Or
in
mountains.
downtown New York than in being a Manhattan apartment.
It
Josh,
doesn't
go ahead.
exist.
It says
I have a cheat code, so you guys go ahead. Go ahead.
I don't know. I haven't decided yet. I'm still working on this one. I love my yard. I wish it was a little bit bigger, but a large flat backyard is lovely because you could do a lot of things on that space. I mean, the unlimited budget stuff makes it a little bit tricky to answer this question. But I have always aspired to having some sort of water view. So there's something about watching the water and enjoying that. So if I was looking out over the ocean, for example, I would probably pick that over any other option.
I am going to go with the big flat backyard. I'm going to build a 60 by 120 pole barn with a sport court inside of it. And I'm also going to build with whatever I wanted. I'm going to build a man-made pond.
Human.
So I have I'm going to make it though.
Okay. Yes.
That's fair. Human-made
You're
pond.
only a
Made by
man.
a
Only
man,
me,
yeah.
yeah.
Mm-hmm.
Human-made pond.
It's going to take you so long.
And I'm going to have a view of that pond as well. So now I also have a view of the water like Josh, but
Does
I
it-
also have a huge
Does
pole
it
barn.
have waves like the ocean?
Just to clarify, though, an acre is 43,000 square feet.
Mm-hmm.
You're going to build a 7,200 square foot structure.
Correct.
That's 1/6 of your land.
Yeah, it's correct.
Wow.
That was the economic segment for
That's
today.
pretty serious. Okay, so here's what I'm going to do, guys. Cheat code. I'm going to get a big flat backyard, and it's going to be 1 acre because I have up to as my option. And I'm going to put whatever I want back there, which is a lake just outside of my 1 acre.
Nope.
And so now I have a lake view and my
You
flat
can't put a
backyard.
lake
Well,
outside
it
of
says
1 acre.
whatever you wanted.
Or.
With whatever
Or.
you
But it's got to
wanted.
be on the acre.
Yeah,
can't
and you
put
don't
a
you
lake
don't
on
have
an
a
acre.
view. If you have to choose between having a view and not having a
Wait,
view,
wait.
you can't pick both.
Haley, are there enough disclaimers written on this question? I don't see any.
So
I don't
AJ
see any.
AJ was telling me I was crazy for putting a pole barn that took up most of my yard, and instead he just took 1 acre and put a whole lake all on the 1 acre.
Which is kind of
So
the
he doesn't
same
even have a
answer
house
as
anymore.
I'm on
It's
the
a
ocean, he's on a
floating
lake.
house.
Yeah.
It's a boat.
He's living in a boat. All right,
So
let's
AJ
get,
picked a view, I think, is what we decided here.
Let's,
Lake
I like a view.
I like that. That Would You Rather actually worked out pretty well, Josh.
view.
Good
You're
job.
welcome.
Let's move into the more important part of the podcast, the iBuying portion. Open Door and Offerpad reported their earnings this last week. And so just to start off, can you give the listeners a little bit more detail on what those reportings look like?
Open Door reported $2.9 billion in revenue in the fourth quarter, but their losses widened to over $400 million, which, I mean, is mostly due to the fact that, like any other large corporation, their decision-making happens a little bit slower because they're making large decisions across an entire country. So I think the softening of the market and their aggressive timing earlier in that cycle have really hurt them because they got under contract and they closed and they fix them up. And then by the time they got them listed, the rates had pretty much doubled, right? So that's made it difficult for them. There's some of their current inventory might sell a little bit better, we think, maybe Q1. We've seen it pick up here in Minnesota at least, and we don't obviously keep a pulse on the local markets across the country, but seemingly everything has picked up and heated up a bit.
Interjection there. I haven't been seeing very many open door houses in the Twin Cities market.
There were a lot last year, but they have slowed a little bit. I think their buying was down this year versus last year. We're looking at their earnings report as well.
I was used to tour them all the time. I haven't toured an open door house in months.
Maybe it hasn't been a good market here. I mean, they've been specific in certain areas, and maybe they've reallocated their resources where they felt like they had the best deals. It's one benefit of being nationwide, I guess, is you can look at where you're doing well and put more resources in those places.
I mean, so a couple other quick numbers with that reporting was is that they're down to $1.8 billion in cash, $4.5 billion in homes is what they have. So they have a total asset count of $6.3 billion, but they have just over $5.3 billion in debt. So net at the bottom is about $1 billion. Obviously, losing $400 million in a quarter is not ideal when that's kind of the state of the business. They cut 18% of their workforce. Stock's down 82% as of when we wrote this. I don't know if that was as of today, Josh. Or
that was as of today.
Okay.
Yeah.
So pretty wild stuff. But OfferPad, same thing, right? I mean, these businesses aren't. They run a very similar model, so they're experiencing a lot of the same things.
The OfferPad thing that was crazy though is they admitted on their call that they lost $24,000 per home.
I think Open Door was $28,000
in Q4. Yeah, it's pretty unbelievable. I mean, the market shift obviously impacts this model, right? So we've talked about how in the past this model works really well when you have natural appreciation in the market, because if the market appreciates 12% over the course of the year, assuming that it's 1% per month, right? Just very basic math. So if you buy a house and you sell it 2 months later, you made 2% just by holding it for those 2 months. So you can continue to have success. But when the market shifts backwards or it just slows down and you're holding stuff for longer and you have to take price cuts and buyers are more picky, you end up just in this really bad cycle, which is okay when it happens for short bursts. But in a market where, and in a business model where your balance sheet is so tight, any shift, that's what Zillow said, right? When they shut it down, they're like, we're at risk of losing our whole business over this. If the market shifts backwards, the losses could be so catastrophic that the whole business could go under. And that's what we're kind of seeing here with these two, where it's like they're losing on every home they bought. Essentially, you're a flipper at mass losing on everything. Your balance sheet shifts so fast that you could run out of money almost instantaneously.
Well, because it's leveraged debt, right? So that's what we talked about. So if you're 20% down as a standard investor and, market loses 10% even, your amount of money you're losing on your cash is massive.
Yeah, even in this case, they're cash buyers, but still.
Well, it's some of it, but they have this revolving debt that they're using to buy it, right?
Yeah, they're buying in cash, but they're getting that cash from somewhere in the form of debt.
Yes, I guess. They're probably paying less on that interest, but yeah, they're not 20% down, but still, they're debt on top of that. You're right. The other thing, as you think about these guys, I'm losing my train of thought here. I don't know where I'm going with this. Why don't you guys take it from here?
So the one thing I was gonna add in there too was the unique thing you saw with the iBuying sector in real estate was that they started getting super popular and growing market share right around the time when the market was the most competitive and the most sales and the most movement that we've basically ever seen in the real estate market to an extent. And that isn't what the real estate market's going to be long term though, because historically the market comes back and instead of it being 12-20%, it's gonna be 5-6%, and there's not gonna be as much movement. I mean, like even right now it's just like there's not that many sellers, there's not many buyers. And so the unique thing with them that I've always kind of said is like, yeah, when it's the best time ever for this, it's going to be decent, but it's not always gonna be the best time ever. And we're obviously seeing pretty quickly when it becomes not the best time ever, it gets rough.
Yeah, the question becomes like you're running it all off of a spreadsheet and all off of an algorithm, right? And you've got to hit the market at its derivative. Like that's the biggest issue. And so if you're not understanding at the exact point in time on an exact property what the exact price should be to make money, you're just kind of like have this sweeping algorithm that's just snaking through and trying to figure out what the price is. You might not hit the market at the right time, and you might not hit the price at the right time. So like when the market's slower, like let's say we were up to 6 months supply, it should be easier for a company like this to get houses at a better price because they don't want to go on the market and have 6 months of trying to sell their house, right? So, but if you're just using an algorithm just to sweep through and give you the price of everything, it might not work that way.
It's not going to work at scale. There's way too much involved outside of financials in real estate, in my opinion.
Yeah. The other challenge, and the point I lost earlier, is when this business model was newer and fresher, access to capital and cash was a lot easier for them. So they could get a lot of money in. They could buy a lot of properties. They could kind of play the, Amazon role. It's we're losing money while we're scaling this, but once we scale, we're going to be successful. What we've seen now is over the last year, because it's been a bit of a struggle and the stock price has dropped 80+% for both of these companies, their ability to go out and access cash is limited in a way that it was never limited before. So if the losses continue to mount and the cash position continues to get lower and lower and lower, their ability to then access more cash to keep the business alive is going to be threatened a little bit here. So that's the one thing I actually worry about, not to get too far into the what's going to happen in the future.
Sure. Yeah.
But that's another key point as you're thinking about these two businesses is if you're an investor right now, are you giving them money or are you not? But if you were an investor 3 years ago, this concept sounds pretty cool and this could be a game changer. Maybe I want to invest here.
I was never giving them money. I'd like to make that known. I was never investing in this idea.
It's a great concept, really. You're a market maker, right? And I think you saw Zillow hop in there and you start going, okay, OfferPad was profitable pretty early on. Open Door ended up flipping a profit, I think, last year.
At one point.
Yep. And it's like, maybe this will work at, in some regard or for some marketplace. And if they get enough market share, it could work for the entire thing, just like Amazon, right? Like you don't go to the store to get stuff anymore, right? You don't.
I find them to be different business.
I got a funny story on that one, by the way. My child ordered a Amazon device that was supposed to come last night. Very excited. Pokemon binder where they could put all their Pokemon cards in it. I was supposed to wake them up at 6:30 this morning to allow them to get up to put the cards into the binder. And then the binder didn't show up last night when it was supposed to. And the comment is, why can't we just go to a store? Why do we ever buy anything from Amazon? So the risk is, when you don't do it right, the impact is pretty significant with some of these approaches, I guess, is the moral of the story.
There's a big expectation.
You're also,
huge.
From a financial standpoint, though, Amazon was built to be more affordable initially. So, you would go on Amazon and I could buy something on Amazon for less than I could get it at Target.
Yeah, the pathway to success was more visible there.
That made sense, right? In this situation, if a seller can make more money going on the market, they will know that and they'll make more money going on the market.
But flippers exist, right? If you think about the reality of real estate, flippers exist and have existed for a long time, so they can continue to be successful. The difference is flippers usually are so localized and so smart about a smaller region and so specific about trying to do it that they've been able to do it
house they're buying is
better.
Different.
Yes, they've been able to do it more efficiently. So we have some local ones that do hundreds a year, and they do it. They clearly are doing it well enough to keep doing it. So the model still could theoretically work. It's just when you're doing it at scale, it seems as though that the localization aspect is lost in a way that creates you lose in the margins, which the margins are already so thin on this business and the risks are already so high because the cash outlay is so significant that any one miss becomes so amplified in the impact.
I think I've seen a few things about OfferPad actually as a company. That's why I was kind of surprised that they're experiencing it at the exact same level because they really have not tried to scale super quickly. They're buying a lot less homes. I think they're appointment rate to offer rate to conversion, all that is all. Well, it's actually lower. They'll offer on less homes.
Oh,
they'll
sure.
see them and not even want to buy them. They'll just decide they don't want it. And their purchase prices are lower. There's more spread on a lot of their deals. But it seems like obviously as they've scaled, they've also experienced some problems. And that's why I think we should what we should get into, and I think it's next on our list though, is this concept of market maker was what everyone wanted to do. Here's our top fan, our super fan, Luke Carlson.
Cheering us on.
He'll be on this podcast here in the next
he will
next
be
month or so.
So this concept of market maker, and that's where Amazon is. That's what they do, and that's I think what differs, Luke, is that they are one of the options.
Yep.
When you want to go buy a notebook, right? You can buy an Amazon Basics notebook. Mm-hmm. Amazon produced that product. They distribute that product. All of that. You could also buy a 5-star notebook.
The Open Door Lennar partnership.
Amazon. Right. So there's a lot of these where
that's a good one.
Yeah, fun.
They're great.
That's a really good partnership idea.
Well, there's just a lot of these different cohesive, vertically integrated businesses that are slightly different from each other.
Yep.
That if Zillow succeeds in what Rich Barton calls a super app, which is you can come on here and you can see all of your options for your situation, right? And Open Door and OfferPad and all of those might be an option. And maybe Zillow has their own option, right? We have our financing, we have our insurance and our title and whatever, and it's all in one place. I think that's a concept that maybe could exist.
I don't think that this business model will be around in the same way to be a part of that concept, because the only way that the consumer goes on Zillow and sees that as an option and says that's the option I want to choose, the majority of that consumer is only choosing that option because they're going to make more money. And if they're only choosing that option because they're going to make more money doing it that way, the person buying that house from them is paying them too much money, is going to lose money on the back end.
Well,
That's why they're going down.
In theory, if a real estate agent is able to continue to provide value, the profession will continue to exist, right? So we only exist as agents because we are providing more value than we are being paid for our services, right? I mean,
Yep.
If we weren't, then we wouldn't exist as agents. Now, the reality of what I think Open Door and Zillow and others will shift to, because Open Door is now moving. They moved Eric Wu, who started the company, into a different job to do Open Door Marketplace. And they called it, what did they call it?
Open Door Exclusives.
Exclusives, yeah. But the reality is what they're trying to do is they're saying, we tried to just buy the houses and sell them to create our own marketplace, right? But the investment was so significant, the risk was so high that as we learned, Zillow realized it first. They said, this is not worth our financial investment. And now with Open Door kind of saying they're trying to do the same thing. They're like, well, we have all the algorithmic data, so why don't you come to us? And I'll show you, like, here's your cash offer, but here's your marketplace offer or valuation that you can use if you sell on this marketplace. They're trying to connect buyers and sellers in a way that, I don't say eliminates agents, but takes the middleman as an agent out of the process. That's currently, we believe, at least, that's why we exist, is we're adding enough value to do that. But if they can successfully link buyers and sellers in a way that the sellers look at it and say, I get more money if I don't use an agent, and I sell through Open Door's platform or Zillow's platform, and the buyers say, I get the same experience as I'm getting with an agent today if I just buy on this platform, that's how they can, in theory, have success in making this more of a reality in the future.
That marketplace is definitely a far more viable idea, in my opinion.
I think they're both realizing it.
At some point, you would think that the amount of real estate agents will have to decline.
It already declining.
is. You would have
That's
to.
just by
That's just
number
how
of
that
sheer
will
number
go.
of sales. I think the problem probably for Open Door in this case is it might be too late to try and create a website like this, right?
Zillow's
So
pretty
Zillow
far
already
ahead.
has done it. What's so unique about Zillow, which I think is so interesting, is all of the agents say that they're trying to eliminate the agents, and they say we're not trying to eliminate the agents, and everybody's kind of wrong probably, as it's somewhere in the middle somewhere.
If Zillow could pull it off, they would eliminate agents.
They
Can't pull it off.
They
right?
would also seemingly love to eliminate really bad agents, which would be great for us too. I would like that as well.
Yeah. Yep.
But if they can pull it off where they're connecting buyers and sellers directly, like Josh said, they probably would. They just know they need agents to continue what they're currently doing.
Well, and they also follow the statement that we make, which is the client and the customer is the North Star of what you do. So they're not in business to help real estate agents. They're in business to help people that are looking to transact in real estate, which is the same reason that we're in business. So if they can do that successfully without real estate agents, they would do that. If they think that's the best way for the client to have the best experience. But if they believe that the agent provides the value and creates the experience that drives their, optimal outcome, I think they'll continue to go that route. And right now, I think Zillow's looking at it going, we're having a better experience, we're having a better situation if we continue to partner with the best real estate agents and try to optimize the situation that way.
We do need to pull back on Zillow a little bit because that's not the actual topic. It's kind of
I guess, yeah, but I guess the marketplace concept,
Sure.
right, is it's another solution for buyers.
Sure,
and
yeah.
sellers.
So I want to get into the marketplace a little bit, but before we get there, I just want to throw this one idea out. Do you, just looking on the future, because this kind of weird thing is going to go, do you think that there's any chance that there's ever a route that Zillow ends up acquiring Open Door?
I don't know what the benefit to Zillow would be.
Data?
Maybe. I mean, they already have I feel like Zillow already has more data than Open Door has, unless Open Door has better systems or something along those lines.
I would see more so like a CoStar doing that.
Oh, sure.
I don't
and
think
just renting them out.
Yeah,
Buy up the real estate.
or they
and
think
rent
that the
it.
concept's valuable at some dollar amount, and then they're trying to buy it. They've been acquiring a lot of different real estate companies recently. I think they've bought up like some IDX type platforms and stuff, and they're trying to create a comparable solution to Zillow right now. And they might see some value in the data more so than Zillow would, because Zillow's been doing it so long.
Yeah, you would kind of think that a company that was at one point as popular as Opendoor, right? And the stock price was where it was, and now it's 82% down. You got to think there's somebody out there that's a little hungry to go, maybe we could acquire and turn something around here and take something, kind of find gold in it.
It'll be interesting to see. I mean, the challenge is that the valuation is still like almost $2 billion even after all the losses. So it's 1.8, I think the last time I looked. And it just looks like a model where if the path continues, it's hard to see how it exists long term. Yep. And long term, I mean, maybe even short term.
Sure.
The burn on cash is so significant.
So let's get into just iBuying in the next year, where you see it's going. Obviously, it's looking pretty tough right now. What's our outlook this year?
Well, I mean, like Josh said, it's not going great. I mean, I would say they're probably happy with, and again, this might just be local Minnesota market, but if they were looking at a market like ours right now, that would probably be something that would excite them today, because they're able to purchase and generally have a decent idea about where things are going, because it's been pretty hot. There's not a lot of listings. So if they're able to snap up property right now and acquire it, putting it back on the market might be beneficial and profitable, at least in a local market that we're seeing here right now. Mm-hmm. So maybe that does something for them. But like to Josh's point, these companies, and it's not just one company, right? So it's not like they're being run poorly comparatively, right? We just mentioned two of them. Zillow already shut down. That's three companies publicly traded, all having, one of them shuttered, two of them having a very difficult time right now. And like Josh said, if you just do some simple math, it's running out quick.
Right. I mean, if you think about this very high level, the concept, real estate agents are sitting in the middle, and essentially you're eliminating the real estate agent from the process. You're buying and selling directly, and there's no agents involved other than you're actually paying an agent on the buy side when you're selling the property. But so you're talking about a 6% commission roughly that you're kind of eliminating, and you have to make money on top of that. And so they're probably looking at saying, like, if we can get a 10% spread on our buy versus our sell, we can maybe make some money. But the financial outlay that Opendoor is going to have to give to get to even that level, to get a basic, barely there profit, is huge. And anything above that, when you're trying to go for a larger spread than that, the buyer or the seller of the house is likely to look at you and say, I'll just go with an agent because I'll make more money doing it. And so the math just gets very difficult, especially at scale, especially with the market that's going up and down so fast right now, that I see it being very difficult to continue doing this. And I mean, we've all talked about it from the beginning. We've all been very skeptical of the ability to do iBuying at scale. And I think they're going to look at it and say, I think they already are, looking and saying that margin rate that we get for what we do and our win rate for what we're doing is too small for this to make sense as a long-term viable business. But if we can use the tech, if we can use the data to create these like marketplace ways, we don't have to take as much money, and buyers and sellers might use this because it actually could be more advantageous. You can create a system where you might be able to actually get buyers and sellers more value. Mm-hmm. The buyer side is a lot harder because buyers don't pay buyers agents commissions right now directly out of their pocket, so it's harder to convince them to go onto a marketplace without an agent. Seller side, though, is a lot easier to sell a marketplace type concept if you can get the buyer's eyeballs there. So,
well, this is what Zillow said. I mean, they said we are exiting iBuying, but we'd like to be a part of this sort of marketplace in a less capital intensive way, is pretty much the words they used, right?
Yeah, because you can't. The math just is really hard to make work if you're buying the houses yourself.
And look at Amazon, right? Like they didn't even introduce having their own products for a very long time, probably, right? Yeah. I don't even know when they rolled out Amazon Basics and all the other companies they have, but they were just the marketplace. So it was just,
they weren't even warehousing a lot of stuff.
The people
logistics.
were selling it out of their house.
Logistics.
Yeah.
Now they became a logistics company to make more money, but that's like, originally they were just a website.
Yeah, it almost, the model almost started backwards.
It almost should have went the other way.
But anyway,
So I want to get into, that's kind of, a little bit what you're thinking, but where are they going to be in 12 months? Like, are they going to get through this?
Oh, can I give one more interesting tidbit?
Yes.
I went on Zillow's website because Zillow talked about the partnership with Opendoor, right? In August, we had this partnership with Opendoor that was this big deal that we kind of said was hidden behind the scenes that was going to this marketplace concept, where it's essentially Zillow was going to use Opendoor to create the Expedia of iBuying. If you go on Zillow's website today, there's still no sign of Opendoor on their website. If you click on Sell Your Home, the only options they give you are sell with an agent. You can click the button to sell with an agent, or the FSBO process, where you can use Zillow to essentially for sale by owner. There's still nothing in there about this whole Expedia marketplace thing on Zillow, and this was 6+ months ago that they announced this partnership. So interesting fun fact.
I think going to this next question looks
Where do we think that iBuying will be in the next 12 months?
Yeah, for sure. But I think to Josh's point, what I was going to kind of piggyback off of, and you guys said it maybe should have been done backwards. What's interesting is EXP actually, that's how they did it. So EXP rolled out their own buying program. I have no idea how many homes are being bought and sold on this platform, but it's called Express Offers. And what it does is instead of EXP buying the home, they just have a marketplace and they tell their agents, get certified in this thing.
You have buyers, we have sellers, we can connect
you can put a potential listing on Express Offers and you'll get like 5 local flippers to make you an offer. And you can take those offers with you at the listing presentation and say, hey, if you want to sell it off market, I have 5 offers for you when you show up. So it's kind of a cool way of doing it. And I think if Zillow or a larger company that has more eyeballs were to do that at like a larger scale and actually partner with local people, it might actually work.
The problem is the margins have to be so significant for flippers for it to make sense in the bulk of cases. Most people don't want to sell their house to a flipper because they're not going to make enough money doing it.
But maybe they're not going to be flipped. Maybe they're going to be rented. Maybe they're going to be short-term rentals. Maybe they're going to be mid-term rentals. There's more marketplaces in real estate than I think.
At the end of the day,
I think more of like a FSBO type scenario is what I'm envisioning.
But they're also looking at, Zillow, if we're talking about Zillow, they're just trying to create the best experience and give the clients, the consumer, the options. Right? They're trying to remove the history of real estate has been like real estate agents hold the book, right? We have the book. You don't
100%.
even know what's for sale. Zillow's trying to they blow that open and say, we know everything now. And so at least you give them an option in that situation. Like they have the choice to do it if they want to.
I think weirdly and this is to go off book a little bit, but that whole DOJ lawsuit, if there would have been something that happened that resulted in buyers having to pay buyers agents commissions, that would have opened this whole thing up. Because if you as a buyer are like, I got to pay this guy 2.7% to help me buy my house. As a seller, you're like, I got to pay this guy 3.3% to help me sell my house. The ability to create a marketplace becomes a lot easier in that scenario because you have buyers and sellers that are both a little perturbed that they're paying real estate agents.
Why have we not done a podcast on that DOJ case yet?
Coming up.
We'll do it next week. Yeah. But I think that's another one that's like, it creates the opportunity to do this. I still think there's value in the potential of technology jumping in the middle and trying to create a better market for buyers and sellers to connect directly. But it's still, I don't know, a little down the road. I do think that the cash burn is going to be so significant in the next 12 months, you might see both of these companies disappear, to answer your crystal ball question.
You think in the next 12 months?
I at some point they run out of money. I
think there's a good chance that OfferPad is no longer existing in 12 months. Again, I'd be surprised if Open Door completely just went away. I would be more thinking someone's going to acquire them or they're just going to completely shift. If Open Door was no longer a business in 12 months, I'd be surprised.
February 28th, 2024. We'll have to check the books.
We'll have to have that conversation.
I'd say 50-50 that they're still around.
Wow. What's your percent chance?
I don't make estimates like this, but I like Luke's idea, though. I think acquisition makes a ton of sense in both these cases if the numbers fit and work.
If the numbers fit. At some point, the numbers will fit because if they're about to go out of business.
To be clear, I'm not knocking anybody here.
No,
I think the model's unique,
curious.
and I'm glad that they're taking the swings, but the math just is very tricky.
Tricky math.
I want to get into the script of the week just because we're running out of time here. So you invite your friends over to your pole barn basketball court on your property with a massive flat backyard.
Who wrote this question?
And there's a lake. There's a lake back here too.
Josh added this question as we were doing the Would You Rather, it appears. And they ask you, what do you think of this whole iBuying process and these companies in general? What's your script?
These companies, hit the scene at a time when homes were appreciating at a record pace. And so while they weren't adding a ton of equity to the properties once they bought them, these guys are not flippers. They didn't, change out the kitchens that often. They maybe paint and clean and throw them on the market. Well, when the market's going up at 2% a month, which it was in a lot of places, you could hold for 3 months and make 6% if you bought at market value. So they found a way to make it profitable in that marketplace. But as soon as the rates went up, you started seeing continually bad quarterly reporting. And so long term, we're kind of concerned with the business model at scale continuing.
And as a buyer or seller of real estate, the reality of this option is always a good one for you, right? So having more options and more flexibility is a good thing for you. And we even talk to our clients about that. If you're selling, I've had clients that I've been to listing presentations. I'd be like, maybe in your situation, it'd be good for us to go through and try to get a guaranteed offer or a cash offer from one of these buyers, because it could be a faster, quicker, easier solution that might get you an optimal outcome. And if that's better than working with me, then I support you in that.
Our listing coordinator sold to Open Door.
I've had a client that I've had sell
I had a
Open
couple
Door.
clients
I
sell
told them
Open
to.
Door, and I said, send me the offer, send me the breakdown. He sent it to me, and I said, there's no way in HE double hockey sticks I'm getting you that amount of money.
Right. You're not going to do better selling with me, so
We
go
don't
that
swear
route.
on this podcast.
Yeah.
There's no way I'm getting you that, so you should do that.
Absolutely.
Yeah. So if they are around, it could be
So
continue
there's
to be a
flexibility there, but the reality is they have had a tough year. Their earnings have gone poorly. Their stock is down 85 to 90%. So the likelihood you're going to get another, like back 2 years ago, you were getting very aggressive offers to buy your properties because they were scaling up. Now they're going to probably be more conservative in the way that they approach you. That's not to say we shouldn't consider it, but it is something to note. And yeah, I guess we'll continue to see how this iBuying process or this iBuying world shakes out.
And on February 28th of 2024, we will
We'll
see
see.
who's correct.
But yeah, but as a friend, like this has been a really interesting thing to monitor in this script scenario, and we'll just keep seeing where it goes.
And you know what's fun about your deadline for next year? Is the day after.
Is it leap year?
It's still going to be February.
Is it leap year next year?
Yeah.
There you go.
I think Holden told me that. He knew that fact.
Yeah, that would be something Holden would know.
And that's all we have today on the Nerdy Agent Podcast. We will see you next week. And remember, be better. This is where you guys throw your computers at the camera.